You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. You know what's going on in the world of volatility? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Don't forget the as well as from the network upon which so many of you have been mainlining all week long. Remember, if you do like what you hear, this show, anything else we do on the network, whatever your platform lets you do, likes, stars, ratings, reviews, comments, whatever it is, it all helps new folks continue to discover the content. Again, we've been doing this for a long time, but we all see the volume numbers. There are new people discovering the world of options and indeed volatility literally every single day. So they need a place to turn. So throw a few stars our way in whatever platform it is you're listening on. And of course, if you want more content in your lives, you don't want your broadcast week to end with Volatility Views. You want to come back after this show for shows like Options Oddities and all the other fun we do. Pro Q&As. We're coming up. It's almost the end of July. Hard to believe. Year's flying by. That means the July Pro Trading Crate going to be going out in a couple of days, listeners. So you want to get your name in that giveaway hat. Of course, live access to this and everything else we do. Theoptionsinsider.com/pro. The place to go to join all of that fun. As we see who's joining us today for a little bit of Vol Views fun. First, let's go out to the Southern Volatility Mecca, soon to be the home of this year's RMC. They knew he was moving there, so they had to move the conference. He is, of course, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. How much did you have to grease the SIBO to get them to move RMC to your neck of the woods?
Well, when they found out I was moving here, they said, well, we got to do RMC where Mark is. So
they said, forget Iceland,
here now.
Forget Greece, forget Portugal. To Austin we go for the world
Indeed.
Of all things volatility. And also joining us, it's been a little while since you checked in with him on Vol Views. Since back in the beginning of the year, February 3rd, he's been on the Pro Q&A a few times. Our pro folks have been hogging him, but he's back on Volatility Views. Mr. Scott Nations, the president over there at Nations Index, is author of one or two or maybe half a dozen financial tomes, and of course, a creator of one or two vol products we like to keep an eye on the show as well. Scott, welcome back to Volatility Views. It has been too long, sir.
It has. It's always fun. I don't know why we let it get away from us.
I hear you're an artist in residence somewhere now, so you got all kinds of things going on over there.
Well, I'm going to actually mention that because I don't get paid anything for it, but I'm proud to announce that I am the new writer in residence at the Ernest Hemingway Birthplace and Museum in Oak Park, Illinois.
Oh, lovely.
That is awesome. So you're mentoring the next generation of writers.
We are. That is the goal. That is the purpose of the program, and that is to raise awareness for the Hemingway Birthplace and Museum, as well as to help and mentor some younger writers, generally high school
Did I see part of the gig is you get to work in his studio or with some of his items, something like that?
There is a workspace in the attic of the Hemingway birthplace that I get to use for the next year.
Yeah, that is pretty cool.
It's probably where he spent some time writing as a young man.
Before I launched this whole Options Insider thing, I was known to dabble with a word or two, mostly on the article side. I wrote a few screenplays. I got optioned, but I never got around to finishing all. I have all these books in various stages of completion, Scott, as I know many people out there do. So maybe if I just focus and spend some time in the Hemingway workshop, it would inspire me to get them done. But congratulations. That sounds pretty fun. As we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we look at all the vol trading and trending and analysis and unusual activity, all the fun that's been going on the vol space and in the vol market throughout the week and indeed including today. It's been an intriguing week, as Fed weeks usually are, listeners. A kind of interesting start to the week. We saw a lot of green, Fed kind of spooking some folks. Then Japan coming along, spooking everybody during the middle of our option block show. If you're listening to the show yesterday, we were talking about how we were up about 0.5% in the S&P, and then it just fell out of bed right during the show. We were trying to come to grips with what the heck was going on. Ended the day, I should say, down about 0.5%. Interesting stuff. Now, of course, today, getting all that back and then some. So it's just been one of those weeks, listeners. Crazy stuff afoot, as you expect with the Fed week. Ending the week pretty firmly in the green. S&P up nearly a full percent. So like we said, getting all that back and then some. Dow, once again, the laggard, up about 0.5%. And NASDAQ saying, hold my beer, kid, up nearly 2% today. So tech-heavy NASDAQ getting back a lot of its gusto, a lot of its mojo that it lost earlier in the week. All this movement, though, at least net from our show last week, not a lot of net evolution on the vol front, even though once you dig into it, a lot more going on out there. We'll get to that in a second. But right now, net show on show, a lot of these numbers not that different from where they were this time last week. VIX cash, when we kicked off the show, right around 13.75, up about a quarter, so almost literally unched on the week. VVIX getting some juice back after losing it and then gaining it and losing it. It was a fun week there. Of course, the vol at about an 87 when we kicked off the show. Still net down on the week, down about 5 points. And VOLQ, a.k.a. the at-the-money vol of the NASDAQ. I'm not sure who cares about such a measure like VOLQ. 17.25, down nearly 0.5 point, about 0.4 point on the week. Of course, we're kidding, Scott. A lot to unpack there. As our guest, we'll start with you. A crazy week, as you expect from Fed week. Maybe not as crazy on the volume side as you might expect during a Fed week. But let's start there. What were your thoughts on what we saw with the Fed, its impact? Then, of course, our kind of surprise turnaround yesterday and maybe equally surprising turnaround today and how all that's playing out on your various vol measures, Scott.
Yeah, I think that everybody was paying attention to the Fed, but they ended up doing as expected, which means that it really wasn't news. I think what we've seen since about noon yesterday is really the story of the week, and that is the huge break in the last half of the day yesterday. The S&P ended up falling about 71 handles, 71 points from its high yesterday. That's a huge turnaround. That's nearly 2% top to bottom. And then, at the close yesterday, everybody was terrified. Nobody's terrified anymore. You mentioned volume not being particularly good. I think that's kind of a function of the calendar. So people who are here are paying attention and throwing it around. I think there are just fewer people at their desks today, just given where we are in the calendar. So, if we look at what's going on right now, vol getting hit, both VOLI and VIX are down between 4 and 5%. That's to be expected. Again, I think the interesting story, though, I think right now is TailDex, TDEX, ticker symbol, is down 15%. And it's the normalized cost of a 3 standard deviation, 30-day expiration out of the money put in SPY. We call it tail decks because that's kind of the threshold for a tail event, according to academics. So you might look at it as the cost of crash protection. And the fact that it's getting hammered by 15% today just tells you that nobody's worried about downside right now.
And is your read on that a lot of people just took off their puts in the big explosion to the downside yesterday, and they have yet to reset them? What is your read on that tail decks number, sir?
Yeah, I think that's exactly what's going on. VOLI and VIX are both near 3-year lows, very close to 3-year lows. So if you're looking at implied volatility in general, it's near 3-year lows. Taildex is not near its 3-year low. It's in the bottom half of that range, but it's still a fair amount off its 3-year low. And so I think what was going on is some people did own some protection in the form of deep out of the money puts, and they're throwing in the towel on those today. They're saying, nope, I did the right thing. I bought some protection. As we used to say in the pit, you have to buy them when you can, not when you have to. But now they're throwing in the towel and saying, well, now I don't need them anymore.
I know you're a big watcher of NASDAQ vol and VOLQ as compared to VIX and S&P vol. We watched it a lot earlier this year. We had the NASDAQ folks on a lot. And for a while there, that spread really vanished. They were moving almost in lockstep for a little while there. That has now widened out quite a bit. As I mentioned at the top of the show, the spread between the cash indexes right around 3.5 points now. So actually fairly wide. What are your thoughts on where we're standing right now, NASDAQ vol versus VIXer?
Everybody, we tend to think of volatility, implied volatility, as some sort of measure of fear. Remember, it's just a measure of movement. And, the NASDAQ 100 is really bouncing around in both directions. So the fact that we have a pretty good premium VOLQ to VIX makes a lot of sense. We see a similar premium in 360-day vol, and people who follow me on Twitter at Scott Nations know that I like to put these things up occasionally. So, for example, right now I'm putting up a measure of 360-day VolDex in SPY versus 360-day VolDex in NDX, and a sizable premium to NDX vol there, even longer dated. And again, that's just that's a measure of a couple of things. One, NASDAQ is just more volatile, bounces around more. Also, you have to pay attention to the fact that the NDX is now up 44% on the year, and the S&P is up less than half of that. So if you were going to buy options for protection in NDX because you have great gains, then I don't think anybody can fault that.
Certainly not. It has been the year of the Qs, surprising many. Intriguing stuff. Just listen to some of our pro Q&A sessions from the start of the year, listeners, to see how many people were betting on the year of the Qs. Spoiler alert, nobody, at least that we were talking to here this year. Mr. Meatball, a lot to unpack. It was Fed week. I saw a lot of movement. Didn't quite see all the volume. Again, we'll get to that all a little bit later in the show that you might expect during the Fed week. But a lot of interesting developments. Yesterday's kind of whipsaw and today's equally dramatic, if not surprising, recovery also playing out. What are your thoughts on vol from this week, sir?
S&P futures just kind of took off this morning, broke over 4,600 and haven't looked back. Maybe we've topped out at this point, but what I am watching is that we're still up 40, and VIX futures are up about a quarter right now. They've been hanging around the highs of the day. We do, as the day has progressed, we're seeing traders start to step in and hedge and buy options, both calls and puts. That would be why we see this rally. But there seems to be some, there's been some option buying since about 10:30 Eastern time this morning, and VIX, while lower today, still well above where it was when that vol event happened yesterday. So I'm very interested to see how the afternoon plays out as the day progresses. Are they going to pull the rug? Is this just another excuse to pull the rug out, or are we all in the all clear? That's why, the fact that Scott mentioned that taildex, that is so cheap, makes you wonder whether there's an opportunity for a back ratio spread or something along those lines for a hedge on the downside that could pay pretty nicely.
Yeah, my wheels were spinning there as well whenever we see these unwindings of tail hedges, and they haven't put them back on yet. Makes it intriguing time out here. Speaking of intriguing time, let's get on out to the vol surface. Lots of intriguing things to be found out there, listeners. And after yesterday's little bit of firming up and vol coming back off again today, obviously, nothing on the VIX futures all the way out to March. That's even sniffing 20. The highest we get is on March, about right around 19.75 or so when we kicked off the show. So everything sub 20 out there that we're looking at. Still a pretty impressively wide chasm between the cash and that front August future. It's right around 1.5 points. So that's nothing to sneeze at out there. We've been noticing that for a while now. Whenever the new pole position future rolls into the slot there, usually there is an impressive chasm, a gulf between the cash and that future that has to go away at some point. So coming into showtime, we had the August future down, but slightly, effectively unched, down almost 1/4 point, and the SEP future down about 1/3 of a point. But again, if we rack those right now, it probably would be literally unched. So again, another one of those weeks out there. Scott, we'll start with you. I know you spend more of your time watching the VOLQ futures term structure. So first off, we don't get a chance to talk about that enough here on the show. Anything intriguing catching your eye in the NASDAQ vol surface? And then B, anything catching your eye out there in the land of the old VIX term structure, sir?
Yeah, they've actually behaved very similarly, despite the fact that NASDAQ 100 has been more volatile. The indexes have behaved relatively normally and relatively in line with each other. I think the interesting thing is as far as the term structure is concerned, at least in SPY world, we've seen very, very, very little volatility in the term structure recently. People just seem to be really happy with the way the term structure is. We don't see tremendous volatility in the short end, which we sometimes see spike. You did see a little bit of that yesterday in the very short term stuff. But I just think people are not paying too much attention to things like term structure, at least in the S&P world right now. And unfortunately, it's going to take some sort of ugly catalyst or exogenous event to kind of grab people by the shoulders, give them a good shake, and have them pay attention again.
Somebody might be headed for that yesterday before saner heads prevailed, apparently. But intriguing stuff out there. Mr. Meatball, what are your thoughts, and do you agree with Scott that people are maybe a little bit complacent right now and might need a little bit of shaking to wake them up again?
Yeah, I mean, I to Scott's point, I agree with him 100%. I think things have gotten a little complacent. You've got zero DTE options, I think, that are maybe messing with some of the longer dated hedging. I was looking at volumes, and it's just crazy how much stuff trades that expires today and tomorrow, and then there's like nothing, and then you go out to 30 days and 60 days, and you start to see some volume again. I'm with Scott. I mean, you and I have talked about this in some detail that there may be a rude awakening. Maybe we saw a little bit of that yesterday. That's why vol blew up so much. But there might be a little rude awakening here for markets. These premium sellers that have been just cleaning up and cleaning up and cleaning up. At what point do their chickens come home to roost? When, if ever. But when that happens, I think you'll start seeing the hedgers back in there.
Speaking of zero day, I have to imagine yesterday was a pretty painful day for a lot of zero day. That was a textbook example of the potential whipsaws you could be exposed to out there, slinging some of this zero day short premium in particular. Scott, I know you've been not shy about expressing your opinions, a lot of them on our pro Q&As, about how maybe you're not a big fan of zero day, a wee bit of gambling, a lot of gambling going on yesterday. I'm betting a lot of people lost. What are your thoughts on trading the zero day contracts on a crazy whipsaw day like yesterday, Scott?
I remember when we were in the pit and things would be really wild and somebody would lean over to somebody else and say, "Oh, so you wanted to be a trader." And I imagine that's how a lot of people in zero DTE options felt yesterday. Let's face it, that zero DTE options are by definition speculation. You cannot say that is investing. And if people want to do that, that's fine. If they want to speculate using zero DTE options, that's fine. But let's not call it investing. Let's call it what it is, and that's fine. And I don't really care if other people do that. To your point, the concern is that it's a day like yesterday. If we had some cascading problems, and you wonder what would happen, given the huge volumes that are now traded in very short-term options. A sizable percentage of the total, say, SPX and SPY volume. If we had some cascading failures or cascading problems, you wonder what would happen there. The closest analogy I can think of is, what happened on Volmageddon on February 5th, yes. 2018.
Yep.
When things happen that people never thought were possible. And that's possible with zero DTE and one DTE only because of the enormous leverage you can get using some of those.
So you want to be a trader. Yeah, they used to say when I was in the S, they used to say, they didn't put this in the brochure. But they have some flavor of that for, I think, every era down there on the floor. Mr. Meatball, your thoughts on, I know you have a lot of your mentees over there in Pitland slinging a lot of zero date. What was that like for them yesterday with just probably their first big whipsaw event for a lot of them?
Oh, what drives me, what's crazy is, we're up 35, we're down, and then we're down, 10. And I look, and these guys are such degenerate sellers. I could buy the 5-point strangle. I forget I want to say I bought the 455 and the 460 strangle when we were trading at like 455, and I think I paid $7 for it with an hour and a half to go. Sold the last of my puts at near $20. It was absolutely speculative, but they come in and crush the premium so bad that you can sometimes scoop some inexpensive value. Strangles in general are, in my opinion, priced too cheap right now. Strangles being by kind of just out of the money put and just out of the money call. That front end selling is smashing intermediate vols so much that there's some opportunities to step in and scoop some premium in the 7 to 14 day range. Before the big firms are out there buying hedges on prices that you should not be able to do that for.
I don't want to turn this into a pro Q&A, Scott, but a lot of our chat is excited to have you back on Vol Views. I'll bump a few of them up now. Options Queen, one of our long standers, she says Scott's a fun guest for Vol Views. She's happy you're back, so there you go. Frank says he wants to take your class at the Hemingway Museum, Scott, so you got to put out a link for how people... You said it's for high schoolers, though, right? So maybe Frank can cheat and say he's a high schooler to take your writing symposium there.
Hey, Frank can connect with me on Twitter, and we'll talk about it.
There we go. There you go, Frank. Maybe you too can get expired. Are there any six-toed cats walking around this museum to inspire you?
Not no park. Those, you got to go down to Key West.
You got to go down to Florida for those. And then we have a question popping in. We might as well get to it now because I'm nice. Why not? Let's go to Z2313. It says, you mentioned how the market needs to be shaken, maybe awake a little bit, Scott. He says, what would be the most probable rude awakening for the next VIX spike? So, Scott, we saw a little bit of a rude awakening shake from Japan yesterday, but outside of that, didn't last too long. He wants to know, what do you think is probably the most probable event in your mind to really do that, to shake the market awake?
Well, I mean, that's the problem is it's tough to know. If you can predict what the problem might be, then you're halfway to protecting yourself against it. But it's a good question. It's the sort of question we have to ask. I think it's almost certainly geopolitical in nature. Maybe Russia and the Middle East, maybe China and the Middle East and Russia. I think it's probably something like that. And if it included a significant fear that energy supplies to the United States were going to be significantly impacted, then everybody who's feeling better about inflation is all of a sudden going to feel so much worse about inflation.
Interesting stuff. We'll save some more for later on in the Vol voicemails. We keep on rolling out there to The mothership VIX options, like we said, kind of a bit of a surprising week on the volume front, was looking extremely anemic today. It was only about 150,000 contracts when we kicked off the show. Looks like something big just went up while we were talking, because all of a sudden it's closing in on 350,000 contracts in VIX, which is much more respectable, especially given the ADV continues to erode even during a Fed week. ADV down another 40,000 to below 700K now, 691. Again, as Scott alluded at the top of the show, we are in this July heading into August period, so seasonally not usually a robust period for volume. But that said, Fed week usually injects a little bit of life into these things. Earnings can also have that effect as well. It's like a pretty sizable DOC 20 roll went up today, so that could be juicing up some of the numbers out there today. Looks like there was maybe 1820 vertical rolled out from October out to December, so that'll account for a good chunk of that. Either way, nearly 350,000 contracts on the tape today. Let's get out to the top 10. Obviously, July has rolled off the board, so it's shaken up the top OI a little bit. Now, if you're looking for puts, you can find a whopping 2 listeners in the top 10. For the longest time, there were none to be found. Not a single put in the top 10 going back for months now. Now that July is gone, we have seen 2 slot in. I'll let you find them. Play a little bit of Where's Waldo here. Number 10 cost you $198,000 to break into the top 10 in VIX land right now. That gets you to the SEP 35s. Number 9, 202,000 of the AUG 18s. Number 8, 203,000 of the AUG 30s. And then, spoiler, we found our first put listeners, 236,000 of the SEP 13 puts slotting in at number 7. Number 6, 244,000 of the AUG 60s. Still maybe my favorite position here in our top 10. Number 5, 245,000 of the AUG 25s. Number 4, 251,000 of the AUG 22s. Number 3, our second and final put in our top 10 this week, about a little north of 250,000, 253,000 of the SEP 15 puts. Number 2, 263,000 of the AUG 20s. And number 1, but at a diminished number 1, there used to be about 350, almost 400,000 of these open. Now down to 291,000. Still good enough for the number 1 spot. It's the SEP 60s, part of that 1x3 we talked about a couple of months ago out there. We got all excited. We thought, hey, it was ratio upside season yet again in VIX land, and then we never really saw any again until a week or 2 ago. So kind of a bit of a pick your poison time out there. Let's keep on rolling really quickly. I'll break down some of the numbers from this week, which you'll see really quickly. Maybe not the Fed week you were expecting. Like I said, today, right around 350,000 contracts on the tape. The big dog, 32,000. Like we said, looks like it's this roll. 32,000 of the D's 20s, followed by 30,000 of the October 20s. 27,000 for number 3 of the AUG 13 half puts. Number 4, 20,000 of the SEP 25s. And rounding out the top 5 on still a pretty light day, but again, the session is young. 20,000 of the D's 18s. Yesterday, coming off the Fed day, seeing that big whipsaw later on the session, you'd easily be forgiven for expecting north of 1 million contracts yesterday. And we didn't even really sniff that. 657,000, pretty much exactly in line with the ADV. That is kind of strange. The big dog yesterday, such as it was, 44,000 of the AUG 13 half puts. So those are starting to rear their ugly head again. Number 2, 42,000 of the AUG 14 puts. Surprise, surprise, all puts. Number 3, 39,000 of the AUG 14 half puts. Number 4, 27,000 of the AUG 13 puts. And then there was one call to be found in the top 5 yesterday. It was the number 5, 25,000 of the AUG 18s. Wednesday, Fed day, pretty freaking anemic. You go back, look at some of our last Fed days, we were easily kissing north of 1 million contracts. This week, not so much, 567,000. Again, it is July, so bear that in mind. But that said, you think this one day would drive a little bit of paper. And it looks like most of that was coming in one trade. 82,000 of the AUG 12 half puts. That's a big number 1. Then it falls off a cliff for number 2. 31,000 of the AUG 30s. Number 3, 28,000 of the AUG 15 calls. Number 4, 24,000 of the AUG 13 puts. And rounding out the top 5 on a surprisingly anemic Fed day, 19,000 of the SEP 16 puts. Getting out to Tuesday, heading into Fed day, maybe you might be forgiven for expecting a little bit of paper? The answer is no. 582,000 contracts on Tuesday as well. The big dog, 30, almost 31,000 of the AUG 15 puts. Number 2, 22,000 of the AUG 20s. Number 3, 22,000 as well of the AUG 14 puts. So maybe a bit of a risk reversal there. Number 4, 21,000 of the AUG 14 half puts. and rounding out the top 5, 21,000 as well of the SEP 15 puts. Monday, a little bit more action, but not much, 608,000. The Monday of Fed week, you'd be forgiven for expecting people to kind of sit on their hands. They're waiting for the Fed. 608,000 contracts on Monday. The big dog on Monday, 78,000 of the Jan 47 halves. I love when these strikes just kind of pop out of nowhere. 47 halves in January. You like those, listeners? I'll have to go dig up what they traded for. Number 2, 48,000 of the AUG 18s. Number 3, 43,000 of the AUG 24s. Number 4, 26,000 of the Jan 30s. So maybe, that was the ratio vertical. So we talked about that on the option block on Monday. That was the 1x3. 30, 45 in Jan. Yes, now it's ringing a bell. And number 5, 25,000 of the AUG 30s. All right, a lot to unpack. Mr. Meatball, as I said at the top of the show, kind of a surprisingly light Fed week. And even yesterday, we saw a ton of whipsaw action intraday. Didn't really amount to a ton of VIX paper. I guess everyone's just off in the Hamptons or in the south of France. They just can't be bothered to sling any VIX. So what caught your eye in the anemic Fed week paper, sir?
Yeah, it has been a slow week for volatility in VIX. Part of that maybe the VIX being low. Part of that earnings. There's been a lot of paper in individual equities as opposed to, general paper as a whole. And then just not a lot to do, I guess, would be what you're looking at right now, according to different traders. We got that big sell off yesterday, and VIX managed to get to a whopping 1475 before it ran out of steam. So, another reason is that curve is so big that using VIX options is not such a great way to put on a hedge right now. And what do I mean by that? One second, let me get my live curve up. We're trading 1385. We've only got about 2 weeks to go till August expires, and it's trading $1.50 premium. September is trading about $3. And boy, the back end of the curve, Jan, Feb, March, they are bid through the roof. So I think it could be a function of the curve structure right now getting in the way.
Scott, same question for you. Anything catching your eye in this somewhat anemic volume week, Fed week? And also, we haven't had a chance to check in on all things VOLQ options in a while. Any intriguing trends or strategies or trades you're seeing going up there that might interest our audience, sir?
Not so much, but let's get back to what you ran down, which I think was really interesting. You mentioned you talked about the 5 most active on Monday. They were all calls. Every one of them was a call. Talked about the 5 most active yesterday. 4 of them were puts. So I think that tells you something really interesting. The other thing I'll say is today we have an interesting trade in the VIX options. In the August 50 calls. August 50 strike calls. So they expire on the 16th. So these have 2.5 weeks?
Yeah.
Somebody paid 3 cents for 5,000. Now, I don't know if that's a good trade, but that person is not complacent. And so I respect that. I think that's an interesting trade. I think that you were also talking about the SEP expiration in VIX options earlier today. I'm always struck by this sort of thing. There are nearly 15,000 contracts open interest with a strike price of 150 and above. And I just find that really interesting.
Scott, you caught me. You found me out. I worked that 5,000 lot while you were talking, so you just outed me here on the show, sir.
It sounds like you had a good execution. The market that was quoted at the time was 1 cent bid at 4 cents, and you paid not quite mid, but just over mid. Congratulations! Those are well bought.
Someone got 10 of them an hour earlier for 2 cents, so you could have done even better. But yeah, these kind of crack me up. We talked about these a lot last year. There was a couple of big themes that came out of the vol space last year. One was, VIX is muted VIX is broken. It's not doing what it's supposed to do, probably because it was just so high for so long, didn't have a lot of room to maneuver. But also the other half of that was these kind of junk calls. Last year, they were all in the par strike and above because we were so elevated. They obviously have come down now. But there is an interesting bit of work being done. I know Matt Amberson has been on our show many times. I joke with him. He's kind of our garbage call guy now in VIX and garbage put guy in SPY and SPX because he's been doing some back tests and some research into trades like this. I think he usually will go a little bit longer than August expiration. Give yourself a little bit more time for these to work out. But at the end of the day, these are all skew. This is all vol. This 3 cents you're paying, obviously. So they have a chance. They can actually outperform in some interesting scenarios, as ridiculous as they look on their surface. These type of garbage positions, I don't know if you want 5,000, but these types of garbage positions, obviously don't need to get to 50 listeners for these things to have a dramatic upswing in value. And that's kind of was the finding from last year when we saw everybody. It seems like everyone really awakened to this trade Q1, Q2 of last year. We saw the pars, seemingly on the surface, absurd, ridiculous strikes, just lighting it up for size. A lot of that has gone away this year, but maybe some of these AUG 50s will spark a renaissance in these. Mr. Meatball, have you awakened to the joys of garbage VIX calls, sir? How many of these did you buy? Is that 10 lot you?
Oh, there's nothing I love more than garbage VIX calls and garbage VIX puts.
Mark, I think your point about the fact that VIX doesn't have to go to 50 or above 50 for a trade like this to be profitable. I think that's important to realize because, if in the middle of next week, let's say something dramatic does happen, something unfortunate and dramatic does happen, and VIX were to spike a fair amount, let's say that it got to 20 from 14 today. Let's say it got to 20 by the middle of next week. People who sold that sort of stuff are going to be scrambling and they're going to be looking to buy it back. And, somebody who paid 3 cents for those today might be selling them for 10 cents next week.
Yeah, that's all you're looking for, right? Nice little 3X, nice little pop. You're doing pretty good. On to the next one there, listener. I know some of you in our audience, we're dabbling in some of these garbage calls. Is this 10 lot one of you listeners out there? Hit us up, let us know. I'm curious if you're still dabbling or if maybe some of the recent muted VIX upside, as Mark pointed out before the internet gods knocked him away. Yesterday's upside move, he only got about a point and change before it kind of ran out of steam. We have been seeing that a lot lately. The old joke here on the show, your upside, you got to get it off within an hour or two because that's really all the time you have before that move runs out of steam. But intriguing stuff nonetheless out there. AUG 50s. Are you on board with these listeners? What people have been on board with, including our buddy Mr. Russell Rowe, just on Twyfa with me yesterday. I know he's all in on all things SVIX. He's bet the farm on that one. And so far, that wager is working out pretty good. His kids can go to their Ivy League of choice now after the year that SVIX has had. Hit a new all-time high, I believe it was yesterday, 3107. We were laughing earlier in the year, someone loading up on the SEP 35s in SVIX, and it just seemed ridiculous. A lot of our listeners had a good laugh at that one, too. Fast forward to now, they're not looking that ridiculous anymore. Only 4 points out of the money. So, yeah, crazy time. I know a lot of you overwrote this earlier, that maybe once it hit the 17 strike, a lot of you were selling calls. Certainly once it hit 20, 22, a lot of you were overwriting the heck out of it. So a lot of you probably already out. I think Russell's out of a lot of his now, too, just from the aggressive nature has called a lot of yours away. But still, there are worse problems to have. Coming into the show time right now, SVIX right around 29.70, 29.75, up about a quarter of a point. So not doing a heck of a lot today, but the run it has been on has been impressive. Looking at the top positioning out there, a lot of July obviously rolling off the board. So some of those July 8 puts gone. It's the AUG 9 puts taking the top spot right now, 2,100 of those. Again, I'm sure I think we talked about those when they went up. I think someone wrote them for around a dime. I think a lot of you would take SVIX at a 9 right now, given the chance. So intriguing stuff out there. Followed by number 2, the aforementioned SEP 35s. They seemed laughable. They seemed absurd. And now they are very much relevant, followed by number 3, 1,000 of the AUG 35. So people have axes to grind now on the 35 strike. Scott, I think we talked last year when the SVIX launched, and we were all excited. We thought, here comes the return of XIV. Some people were a little bit perturbed that they would approve something like this, bring back an XIV-type clone after the madness that was Volmageddon of 2018. Others were very excited. Obviously, SIBO and others, they want that volume, so they were hoping this would be the panacea to the ills that have beset the futures of late. Hasn't really turned out that way. Underlying volume, all right. Options volume still not quite there. We've been talking many times on the show. Hopefully they'll add a weekly sometime. That would really help to gin up the volume a little bit. But what are your thoughts on the inverse product and maybe how it's performed? Maybe to your expectations, maybe not so.
Well, you would expect it to have had a big rally since its low in, say, October of last year. You would have expected it to have a big rally, and it has. It's done exactly, volatility has done exactly what people who buy SVIX wanted to do. I would hate for exchanges to be the nanny state and say, no, you can't trade this product. You can't even buy it. I would hate for that to happen. I do hope that people who buy this understand what the risk is. And I think with XIV, not everybody understood what the risk really was, even though some people were shouting from the rooftops. I think the biggest problem with the options for SVIX right now is that the market quality is just not very good. And I don't blame market makers for not tightening these markets up. But for example, the at the money call in SEP, the 30 strike calls, that market's 205 bid at 265, just ticked a little bit. There it is. And that's a pretty wide market and tough to trade very well with $2.50 market that's 60 cents wide. The puts are not that much better, and the deep out of the money puts are really, the market quality is not very good. So I guess my point is, if you're going to trade options on SVIX, please do not sell naked puts. And whatever your strategy is, you have to pay attention to your execution. You got to really manage your execution both in and out, or somebody is going to buy a bigger boat and name it after you.
Yeah, that's not a set it and forget it type product. You really have to babysit your executions out there. Mr. Meatball, have the internet gods smiled upon you? Are you back with us, sir?
Yeah, I am. My wife changed the password to Skype, and it kicked me off.
Of course.
So that would be why I disappeared. But I'm back. Any
thoughts on the lingering malaise that is SVIX, sir?
I love SVIX. It's doing what it's supposed to do. I'm with Scott. I don't know why you'd have a problem with it. I think people have a better one. I think it's better managed than old XIV was, and two, I think that people are gonna be on board with it. That's my take.
People are not on board with his UVIX. I'm not on board with it until it really reverse splits 3 3/4. That nobody cares. There's no paper at this one, so we're going to roll right over UVIX. Get out to UVXY. Actually, looking literally unched on the week now as it firms up a little bit. 16 3/4. That's exactly where it was when we left it last week. Doing a little bit of paper today out in UVXY. 78,000 contracts on the tape. The ADV is 68,000, so that's up about 3,000 on the week. So starting to move in the right direction again. Let's look really quickly, see if anything interesting is lighting it up out there in UVXY today. It's like the big dog, 5,800 of the 16.5 calls going out today, which are still in the money calls. So not surprising, people playing fast and loose close to the fire out there in UVXY as they are wont to do. And in terms of top positions, the big dog out there, 28,000 of the SEP 8 calls. Leading the dance out there. H-strike. We've talked about it before. People have this fascination with the H-strike. In this one, obviously, in SVIX, they just went away. They were July. H-strike across the board seems to fascinate people in a lot of these products out there. Speaking of these products and fascination, VXX has been fascinating as well. 23.5 right now, kind of unched up about 1/10 of a point from last week. Not a heck of a lot going on. Net movement-wise, volume-wise, looking a little bit more respectable. The ADV is starting to tick back up again, back up to 74,000. Puts it up about 4,000 on the week. And today we've already got 77,000 contracts on the tape. So intriguing stuff. Let's look really quickly today, see if anything interesting is lighting it up. About 10,000 of the 23 puts. Again, these are going out today. And about 5,000 of the 23 calls. So pretty much right around at the money strike, leading the dance out there, as you would expect. The big position out in VXX right now, 28,000 of the AUG, 22 puts, so slightly out of the money puts. Looks like they have a pretty good chance of getting there, maybe even by next week at this point. So intriguing stuff. Scott, the last time you joined us, VXX was still coming out of its malaise from last year where Barclays really screwed it up. I think a lot of us, myself included, were pretty dismissive of VXX back then, back in February. Fast forward about 6 months or close to it. Seems like things have changed. It's trading again. It's starting to do what it's supposed to again. Have you started to follow this again, or are you kind of a once bitten, twice shy kind of guy when it comes to VXX, sir?
I think that, we think some of these notes, some of these exchange traded notes, we make the mistake of thinking that they work just like ETFs, and they don't. You have to pay attention to the fact that for the bank, it is a bigger headache. And so I understand why sometimes they run into these goofy problems. And, we've seen this before where only so many shares were authorized, or it's not the first time we've seen something like this. If you look at the chart for VXX, it's ugly, as you would expect. I mean, there are lots of reasons to think it would be ugly. It's a really tough long-term holding. That is not intended to be long-term insurance. So don't think it is. And again, if you look at the 52-week chart, it's gone from, 85 down to 23.5. So that is very much a tactical trade. And the fact that it's fallen so much is to be expected. So that's not a flaw in the product. That's just the way the product works.
Mr. Meatball, anything up your sleeve this week? I know you were slinging a lot of VXX puts of late. You were waiting for a little bit of a reset. Have you done anything else out there? Anything catching your eye in UVXY this week as well, sir?
No, I'm just hanging back. I actually closed out some UVXY puts that I was carrying today, and I'm looking to hopefully reload in the next, in the next day or two, hoping we get a pop so that I can load up. That would be what I'd like.
A lot of you like a little bit of earnings, Vol listeners. Luckily for you, we have hot off the presses from our friends over there at ORATS, all the updated earnings move results, earnings season, and earnings trades reports for you. You can find them for yourselves at theoptionsinsider.com. Click on the Options News and Articles tab. We'll also tweet them out if you follow us over there at Options. So a lot of great data because we like you folks completely for free because we're nice like that. Right now, looking at the updated number, I was talking about the earnings season report yesterday. On the option block, it was around 150%. Remember, I said it's going to come in. That's inevitable. And that has happened. Now, I think there were about 65 names reporting on that report. Now we have about 196 firms reporting. So that number has been cut down to 124%. Still dramatic outperformance. And it's probably going to come down from there as well because our long-term average is about 98%. Wouldn't be surprised to see that number come down quite a bit. Remember, 124%. If it's 100%, that means every name moves exactly as much as their straddle is pricing in. 124% means we've had some outperformance in the early days of earnings season. We'll see if we can keep that up. I know you folks have a lot of questions, so let's get to them right now. A little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Let's go out to our chat. Got a bunch of wiseacres in our chat. Nicole says that 10 lot of AUG 50s is him. Oh, so that was you, huh? You pennied that 5,000 lot. You got him for 2 cents. That guy hates you right now, by the way. So congratulations. Good execution to you. Let's get out to this question. I touched on it last week. Came in from Ryan Stein, but I thought it's foolish for me to put words in Scott's mouth when he's going to be on the show the following week. So, Scott, I held this over for you. This question comes from Ryan Stein. Like I said, he wants to know, what is the reasoning behind NASDAQ choosing to focus solely on at-the-money volatility for the VOLQ product as opposed to the skew approach taken by VIX? Scott, you and I have talked about this a number of times on Pro Q&A. It has been a while since we talked about it on VolView. So Ryan Stein wants to know, why just at-the-money, sir?
Sure, and it's not just VOLQ. VOLI, VOLI, is our precisely at-the-money implied vol on SPY, so on the S&P world. And I guess I'd put it this way. While they're very much in line today, This is not always the case, but the VIX is down 4.02% today, right now. Where is that coming from? That would be my question to you. Where is that coming from? Is it coming from at-the-money options? Is it coming from juicy puts? Is it coming from deep out-of-the-money puts? Is it coming from calls? Well, if you just look at the one number, you have no way of knowing. There's absolutely no way of knowing. And so that number doesn't really give you very much information. As we say, you have to deconstruct skew, and that's what we do at Nations Indexes. You have to deconstruct skew to understand what the market is really telling you. And so, for example, VOLI is down 4.14% right now. Taildex, as we talked about, is getting crushed. Calls are actually more expensive on a relative basis, even ignoring the market move today. And so it's only by putting all of that together that you really understand what the market is telling you. And for another reason, we wanted a volatility measure that really distilled volatility down to its essence, and that is at the money vol. I used to say that, I still like to say, that when you walk back into an option trading pit, the first thing you would ask, since you've gone to get a drink of water or you've gone to lunch, I don't care where you've been, if you come back, the first thing you ask is, what is the at the money vol? Generally, you would say, what's the straddle? And then as a trader, you start to build the rest of the picture yourself. And you can't do that if you only have one number that distills everything into that one number. So I consider the way we deconstruct skew to be a much more helpful, instructive way to look at volatility.
All right, now it's time for all of us to look at vol in maybe not the most healthy or constructive way. We have to attempt to figure out what the vol gods hold in store for us. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to do just that. We wrestle with what the vol gods hold in store for us here. And coming into the end of the show, VIX looking a little bit firmer right now. It was at about a 13 3/4 when we kicked off the show, and hanging out right now. Yeah, kind of still right around that level, actually. 13. Yeah, about 13 3/4 still. So did juice up to about 14 and now coming back down around there. So pretty close. There we go. Getting updated crystal ball levels here as we're coming to the end of the show. I was feeling lighter. Mr. Meatball was on the show with me last week. We were both feeling lighter post-Fed. Yesterday's little bit of sell-off kept us juicy, and we haven't really come off that much since. So 12 double, that's where I was coming into the show today. Mr. Meatball doing his palindromic nonsense as usual, 12.21. No joy, no winner chicken dinner for either of us today, listeners. So that means, Scott, you get the dubious honor of going first. Let's look really quickly out here. Oh, you know what? Producers is putting in some of our listener chat. Nichols was looking pretty good, 13.75. That's pretty good. It's about a bullseye, Nichols. So I tell you what, fabulous prizes await for you. Our producers will reach out to you. See, listeners, you play our crystal ball game. Even you listeners on demand, you can play along too. We're nice. Just send in your submissions by the end of the day today, so we're not cheating. You don't have an unfair advantage if you're guessing next Wednesday or something. Nichols, fabulous prizes await, so our producers will reach out to you, get to choose some pretty awesome stuff out there. But Scott, a long way around to saying there were no winners last week, so you as our guest get the dubious honor of going first. In honor of you, if you want to pick VOLQ as well, have at it, sir.
Can I also pick volley?
Sure, go crazy.
I think in VIX, this time next week, remember, we will be even further into summer. We'll actually be into August. We'll be past the jobs number. And so I think vol is going to take it on the chin. I'm going to say for VIX, 1275. For volley, I'm going to say 1180. And for VOLQ, and I think it's going to really take it on the chin, 1625.
That's coming off quite a bit. Interesting there. Seeing that spread still hang out around 3.5 points, which is interesting. Tell you what, Mr. Meatball, I'll let you go next because you were farther away than me. What do you got going on for next week? You can choose any of those three to pick from. VIX, obviously. If you want to add others, have at it, sir.
Sure, I'll add VIX and I'll do VOLI as well. I don't know. I got to tell you. So VIX is 1372. I'm going to say 1414.
Ooh.
Or no, 1441. Excuse me.
Staying a little bit frothier next week. Interesting.
Yeah. Well, just a touch.
They have shown a reluctance to kind of crush it and a reluctance to rally it too hard.
And I got to bet against my position.
Yeah, there you go.
So
there you go.
I got to go higher.
And you want to do a VOLI or VOLQ while you're at it as well?
Yeah, VOLI. I'm going to say 12.
VOLI
1221. Excuse me.
VOLI 1221. Got to keep the palindromic theme alive. All right, listeners, it's up to me to give you the actual market, right? Let's go with VIX first. VIX, I was feeling a little bit lighter. After post-Fed didn't really materialize this week. It's kind of hard to argue with a lot in either direction. I could maybe see a little bit of a pop to the upside, but we have not been able to sustain that really either, even though I wouldn't mind seeing that. Let's get out to, like I said, we're 13 3/4. I'm going to say we're going to be kind of gently lower, but maybe not that far from where we are right now. I'm going to say 1335 for VIX, and then I'll go VOLQ as well and get my model back running for VOLQ. It fell off over the last couple of months. I gotta firm it back up again. So looking at that, it's roughly 3.5 points. I'll say it tightens up a little bit. I'm going to say 1555 for VOLQ. All right, there's your market for next week, listeners. Scott's at 12 3/4 for VIX. I'm at 1335. Mr. Meatball feeling the upside at 1441, and then VOLQ. Scott's at 16 1/4, and I'm at 1555. All right, that music means we have come to the end of our journey through volatility for this week. Hope you had fun joining us out there, listeners. For all you on-demand folks, that will conclude your broadcast week with us. If you want to get the old options oddities in your life, you know where to go. TheOptionsInsider.com/pro. We'll be coming up in a little bit. A lot of fun trades on the docket this week. I think it's going to be a fun one. Of course, if you're on the pro side, just hang out. We'll be back in a little bit with everything options oddities to wrap up the week. But before we go, Mr. Scott, we touched on your artists in residency, your products. Anything else you want to hit on before we get out of here, sir? Now is the time. The floor is yours.
Boy, I wasn't ready for this. I got to tell you. Listen, the markets are complacent now. Traders are complacent now. So are investors. It's easy to get sucked into that, particularly in August as we pay attention to other things. You know, your investing is important. You're going to fund and educate. You're going to fund kids' educations. You're going to fund retirements. Don't just switch it off, but get your portfolio to a place where you don't have to pay attention to it all day, every day. But don't just switch off paying attention to what's going on.
Do I smell a sequel to The Anxious Investor, perhaps The Complacent Investor, coming down the road, sir?
Boy, you are right on it. We are pitching a new book to publishers as we speak.
Really? There you go.
Yeah.
See? I'm just your brand manager here for you, Scott.
I appreciate that. You've done well.
My invoice will be in the mail post haste, sir. In the meantime, you know where to find them, listeners. Of course, nations.com is where all the index values lie. If you're intrigued or curious, of course, you can trade things like VolQ over there on your brokerage platform, and give them a follow while you're at it over there at Scott Nations on the old Twitter or X or whatever the hell we're calling it now. He's always tweeting out cool things. Scott, I've noticed you've had good timing tweeting out a lot of cool stuff around noon on Friday, so it does sneak its way onto Vol Views these days. You have good timing with the data tweets. Keep it up, sir.
Absolutely. I appreciate that.
All right. And Mr. Meatball, if folks want to check out what you have cooking in the land of VIX or VolQ, whatever they want to talk about, where should they go? What should they do?
Yeah, just head on over to optionpit.com. You can read the Trader's Edge every day. I'm going to give you some actionable ideas on the daily, so don't miss it.
There you go. Don't miss it indeed. Unfortunately, you're going to miss the rest of our shows today if you're not on the pro, theoptionsinsider.com/pro. But we'll be back again on Monday with the old option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.